Hello, everyone, and welcome to this week's watch list review. Um, had four names on the list this week for inside weeks. There were many more than that, but I went with the four that I liked the best. Trying to keep the list a little bit smaller and easier to navigate. The first one was Oxy, looking for a break above 58.20, and you can see right here we had the inside week. Uh, Almost a hammer, but inside week looking for a break above 58.20. First target was 59.60, second target was 60.73, third target was 63.42. We actually hit a high of, how do I get rid of this thing here? There we go. Actually hit a high of 63.24, so we just missed target 3. But if you do like I suggest and put your sell order just slightly below your target, you probably would have hit that one. So we take a look at the 60, break it down a little bit lower. Take a look at the 60, go back to Monday. Okay, here's Monday. We opened just below the trigger. So you could have actually, in the first hour, the first 60 minutes, and I have my timer, my chart starting at the market open. So this candle goes from 9:30 to 10:30. You could have hit target 2 and got almost a target 3 just in the first hour before 10:30, or basically at 10:30 because it closed right about that level. So that was definitely a nice one there. Um, you could have held a little bit longer, but I wouldn't have done that. I think if I was trading this, I would have moved my stop up along the way, and I probably would have got out. Worst case would have been when we broke below this inside candle. That would have been my exit, but I likely would have got out most of it, probably somewhere in here. So Oxy was definitely a good strong winner. Coca-Cola, have a Coke and a smile. We actually opened above it, so we gapped above the trigger. I probably wouldn't have traded that one just because I don't like trading once it gaps. If it gaps over or below the trigger, I usually take it off the list. It's, as far as I'm concerned, it's done. You can still trade it. You can wait till it comes back below and then look for it to pop above it again. But you kind of it kind of it kind of tarnishes the setup at that point because now you're not looking at um, you know you've already broken this threshold, so breaking it the second time doesn't have the same juice as it did the first time. The people that were looking for that break already got in it and traded, so they're probably not going to get in it here. That's just my take on it. So to me, that was a dead play once it gapped above the target or the trigger. Coca-Cola, this would have been this wouldn't have really worked out. I'm sure if we look at the weekly chart, it would have looked great, but it triggered, got almost halfway to target 1, and then it pulled back and probably would have stopped everybody out. Um, and then it triggered the second time, and then it went up and hit target 2. Again, same scenario as Coca-Cola. Uh, Once it triggers the first time, that's it for me. I'm not looking to try to get back in because, like I said, the people that were watching for this break already got it there. So if we look at the weekly, though, I'm sure the weekly looks really good. Yeah, look at the weekly. Looks like we did really good. Hit target 1. That's why I break it down to smaller targets because most people won't show you that. They're just going to show you, hey, look, it hit my trigger and it hit my targets and I'm done. But if you go back and look, it triggered and then it pulled way back and would have stopped you out. So in reality, you wouldn't have been in the trade anyway. So here's XLP. We triggered, got a little past halfway to target 1, but again, let's take a look at the smaller time frame. And would it have been a successful trade? Probably not. We opened here, we came up, we triggered, didn't quite get the target one, and then we pulled way back. This would have stopped probably everybody out. Um, any trader with any type of risk management would have been out of this, so this wouldn't, this would have been a stop out here. So Pepsi and XLP would have been stop outs. Coca-Cola would have been a no trade, and Oxy would have been a nice winner. So it is what it is. Choppy markets right now, so it's not easy to trade. I don't believe I traded any of these this week. I was pretty selective in my trades this week. I mainly stuck with SPY and QQQ. I think I hit SPY or QQQ yesterday for, I think it was actually 28%, but at one point I was up 56%. I hit QQQ puts today for 27%. But those were trades that I was looking at, shorter entries. In fact, I don't want to pull it up on this screen because I don't know. I think it'll reveal my account information. So let me pull it up on my phone and I'll just read it off to you. I actually traded Qs twice today, and I stopped out the first time. But that's just an example of what is possible if you use good risk management. So I got in Qs the first time. I got in calls at 10:25 a.m. Paid $1.40. I stopped out at 10:26. 1 minute later for $1.14. That was today's expirations. They move quick. I was looking for a quick pop, and as soon as I got in, it started to pull back a little. So stopped out of that one for what I lose, 26 cents a contract. The second trade I got in QQQ puts at 11:09 a.m. Paid $2.77. They were next week's. They weren't this week's. Paid $2.77. Sold them at 11:33. 24 minutes later for $3.53, and that was my 27%. I think at one point those were up to, I think it was close to $4. But I set a stop order in, and it pulled back some before it tripped me out. So I could have sold when I was up 56%, and it would have been better. But what if it would have ran to 150%? And that's why I'm setting my stops the way I am, to try to capture more of a move. Typically, my average win was probably closer to 10 to 15%, but in the last few weeks, it's probably closer to 25, maybe 30% because of the way I'm using my stops. So it's just working out better for me that way. Sure, I give up some profit on the pullback, but I'm making up that profit on the bigger move. So in the end, my net is that it's working for me. So, and I'll go over that, a little bit more experimenting. It's basically a 5-minute Heikin-Ashi exit, a 5 to 15 minute, depends on what time frame my entry was on. I'm not entering on the Heikin-Ashi, but I'm exiting on it. But I'm experimenting with that too, to try to get the best exits on that. You got to kind of balance. That's a balancing act, because you don't want to stop out of it too soon, but you don't want to stay in it too long and give back all of your profits. So kind of, I have a couple of different scripts that I kind of set up based on Heikin-Ashi to try to get a stop out. So I'm playing around with those. So, but that's it for this week. I'll try to get some scans going and get another video out later this weekend, and hope everybody had a good trading week, and see you guys later. Thanks. Bye.